Hello traders, welcome to another daily analysis. Today is February 8th already, but we're doing it for the day of February 7th. We are right about 30 minutes into the London session. Apologize a little bit delayed today for my analysis. But let's get into it. Just let me pull out my report. Okay. So today it was another very quiet data day. We opened the market, no tier 1 data in London session. And the New York session, we had a trade balance from Canada and US. Now, the Canadian number was lower than expected and lower than the previous, while the US trade balance was better than previous and the expected number. So for Canada right now, really the trade balance, or even for US, largely the large factor for Canada especially is the oil market, and that's going to be a more major catalyst when we are heading to future, which I'll explain later. The Canadian building permit was also a disappointment, but nothing to worry because it's really housing will slow down mainly in the Vancouver area, but the overall nationwide it is still a very booming market. The PMI number from Canada was also lower than previous. Again, it's not a tier 1 data, but just to show you, Canadian data this today was not that positive. Along with the drop in oil market, that's why we saw Canadian dollar lost strength today. The job openings from US slightly lower than expected, but almost the same as last one. This one, of course, is not a tier 1 data also. And I'll talk more about US dollar later on. Heading to late Asian session, we saw the bank lending and current account from Japan, both lower than expected previous. Again, not something too worrisome. It's just not something to surprise. Equity market today were all green and it gave us risk on sentiment. But of course, the oil market had dropped to a very, actually quite huge drop for the day. So our view right now, which I'll explain further, for Euro right now, there's no major catalyst. And like I said yesterday, the main catalyst right now is this political sentiment, especially from the French election. Now, how is it gonna play out? It's really, I don't know to be honest, but it's really depend on how much confidence that people have towards Eurozone. Because I personally bought Euro yesterday because I think fundamentally Euro is stronger than Japanese yen or Swiss franc, this kind of safe haven currency. The panic sale came in on Tuesday and Monday when Le Pen bet her presidential election. So it's nothing surprise, as I mentioned. People know France is going to have an election. People know they have this independent party who wants to leave Eurozone. But right now, it's really a very interesting psychological phenomenon that you know what's going to happen, but when it's really happening, there you start feeling this kind of emotion. Right now, there's a lot of emotional traits for Euro, a lot of panicking. Of course, I took a trade that in the opposite of the crowd, which does not mean I'm gonna be right. On the contrary, that means I'm sort of like catching a falling knife. So it's quite high risky trade, but I just thought the opportunity was quite good. I'm still in my trade, which I'll explain later. But for me, my perception for Euro is really 50-50. I actually don't have that much confidence for Euro or even for my own trade, just because on the bigger picture, I do think this panic sale is a little bit overreaction, especially nothing really happens. All we had is that Le Pen started presidential bid, but this alone caused such a volatility. And for me, this pretty much wipe out all the previous strength of Euro from the fundamental data. So I am, as a fundamental trader, still want to place my bet with the fundamental strength. But sometimes I do get whipsawed by the sentimental noises. So it's, again, I don't know how much panic the crowd will feel. If they continue to feel a lot of uncertainty, then of course we're going to see a more downside movement in Euro. However, if the crowd can regain confidence, then euro will go upside fairly quickly. That's what my bet is, but I might be wrong, right? For US dollar, it's exactly the same picture. The fundamental data today, although not positive, but it's not negative either. It just continues to be a resilient picture, fundamentally speaking. Sentimental element continue to be abundant. Now, abundant doesn't mean it's good. It just means you have a lot of sentimental news to drive the US dollar. And that's pretty much the whole picture of US dollar right now. Now, this week, or even now, the court is making a decision in regards to the travel ban from Donald Trump. Once that come out, it will be a big catalyst to drive US dollar or even a global market. Of course, if the ban resume, that's a sort of a negative sentiment for US dollar. That means the protectionism continue to overshadow the US economy. If the ban, however, overturned, then that will be a very positive sentiment for US dollar. That means that people will regain confidence knowing that the federal system or the whole constitutional system is stronger than the White House. And that will be perceived as a very positive sentiment for US dollar. So that's really the main catalyst for US dollar right now. Especially this week, we don't really have any fundamental catalyst. So what's driving US dollar is really the sentiment right now. So pay attention to that. Pay attention to White House. Pay attention to Donald Trump, whether you like him or not. That's unfortunately that's really the main driver for US dollar. But from the sentimental point of view, because the fundamental data is good, but it's in a way that it's not going to provide too much surprise anymore, right? People know it's a good fundamental data already. So the sentiment will be only catalyst. And since we are really leaning toward the negative side, and why do we say that? It's because from the past behavior of Donald Trump, most comments and action, the market always perceive quite negatively. So that's why we think if we have any fresh new sentiment from US, most likely it's have more probability to go downside than upside. So we are more bearish in the US dollar for now. For British pound, it's a very interesting thing. It took a huge roller coaster today. So British pound is again a neutral currency. So really you can trade it with the flow. That means don't have too much bias toward British pound. It can be very negative. It can also be very positive. It depends on what's happening for that day and depend on what are the market reactions. So if you want to trade it, I really strongly suggest you don't trade any daily trade for British pound. Go with the flow, do in the intraday trade, and then you can really scalp some pips. So what happened in British pound? Fundamentally, nothing new. What's happening is already been known by the crowd. The pound, because of the pound devaluation, the inflation continue to be higher, and that will slowly affect the consumption, which already reflect in the lower retail sales data. That's a known fact. So again, if you see continuation of high inflation, just knowing that it's not a new thing, right? If it's not a new thing, it's not going to cause a long-term effect for the market. So what's again driving British pound is exactly the same as US dollar, is the sentiment. And that's where the interesting part comes in, because the sentiment shifts so fast for British pound. Last week, ever since the Brexit go through the parliament and the parliament vote to go with the Brexit, we saw a little bit of panic movement of sell into British pound. And again, it's nothing new, but once the reality becomes a reality, you have a new fresh panic, a new fresh fear into the market. People are kind of feeling that, oh wow, Brexit is really going to happen. After March, we are officially out of Euro. So this is kind of scary for the investor, for trader. We saw a large sold off. And then over the weekend, couple days to calm down, people kind of get used to it. They're like, you know what, it is what it is. We are going to leave Euro, and that's the fact. So now they regain their confidence and looking forward. When they start looking forward, there are some good positive elements. First thing is that the parliament right now is officially involved in negotiation. So that means that it's not really a Theresa May's own choice anymore. since the parliament involved, people kind of feel like, okay, now the negotiation will at least be a more smooth. We will at least get a better deal than letting the parliament takes all the charge. And that alone give British pound another fresh new positive sentiment. On the other hand, you have a Bank of England member came out saying that the rate hike is inevitable. Of course, the member might be a hawkish member. Again, it's not a surprise. Right now, if you're trading British pound or US dollar, or even the whole global market, just knowing that the surprise can drive the market, but sometimes existing picture can also drive the market, as long as that element is quite emotional. So as mentioned, why did Euro sold off this week? It's not a new surprise. It's just because Le Pen starting her presidential bid, and that caused a new fear. Why did British pound get this new inflow today? It's because the parliament is involved, and it has been involved, but this give the market a new emotional bias. So really nowadays trading is a bit tricky because you cannot just look at fundamental data. The market is really highly emotional, so you do have to take into consideration of where are the market sentiment. That's really the main driver for this week. For Canadian dollar, again, consecutive of negative data today, of course, pressure it a little bit, but the main driver was the drop in the oil market. And that's really is going to be the main catalyst for Canada right now. This Friday, we will have the employment data. That will providing a more direction for Canada. If we can have a good data, then it will again give us a better fundamental strength into Canadian dollar. In terms of oil market, right now we are still in this paradox. You have the strength from OPEC, continuation of oil curve. You also have the weakness from shale producer, which is continuation of output. And these two really hedge out each other. Now, right now, things will get a little bit complicated. The reason is Donald Trump and the Republican are going to snap this 20% import tax. And looks like they are going to do it. It's not a law yet. But once this becomes a reality, if we really have a 20% import tax, that will significantly affect the oil market. Especially you will see a divergence in the WTI and Brent crude. The reason is because US, although produce a lot of shale oil, they are still the largest oil importers. Now, back then they took the advantage of the low oil price. So when the oil price dropped, even though when the oil price dropped, they do two things. They trying to import more oil into the market because it's cheaper than to produce oil on themselves. And now the oil price is going up, so they're going to produce more domestic shale oil. But because of the import tax, means that it further discourages them to buy more oil. So right now, the oil price goes up, already makes them not wanting to buy more oil. They want to produce on their own. Now, on top of that, if you have this 20% import tax, there's really no incentive for US to import any oil. So you're going to see WTI goes even higher while the Brent crude will lagging behind. What does that have to do with Canadian dollar? That's why the tricky part comes in. You have to kind of look in the detail because right now, it's not a micro scale anymore. Don't forget that Canada is going to renegotiate the NAFTA deal with US. That will significantly affect the energy sector for Canada. So if you want to trade Canadian dollar in terms of oil relations, you have to look into the micro detail of what's going to happen between that trade deal. Because if Canada can score a nice trade deal with US, then really it will kind of depart its attachment from the whole oil market, because as long as they can have a good deal with US, then that's really 70% of their output, and then that will providing a good chief. But if US decide to give 20% import tax nationwide, including Canada, that will be a very negative news for Canada because the oil will not be competitive enough, and then that's really not a good sign unless Canada can strike another trading deal for oil with another country. But we don't have that yet. So things are a little bit tricky to trade Canadian dollar. But before that happens, right now it still has a good fundamental strength. Of course, you have to see what happened to the employment data this Friday. But right now, I used to be bullish, but now, with all this data fundamental, it's kind of staying on the sideline. And tomorrow, you do have the crude oil inventory come out again. Expectation is a large build, so again, that will be a negative data for oil. For New Zealand and Australia, these two currencies are really the more confident buy on my list right now. Very simply put, that they are the only two currencies that is not influenced by a negative sentiment globally right now. As I mentioned, they are politically stable. They are outside. They are geographically isolated. They're outside all this turmoil from U.S. Eurozone and even China and Japan when they were being attacked by Donald Trump. So New Zealand and Aussie, it's very stable, very grounded on their own. Fundamentally speaking, they both had a pretty good data recently. And of course, they both had their own risk. Aussie still had this risk from low GDP, from the Chinese slowing growth, from the commodity price speculation. New Zealand still have the risk of low inflation annually speaking, but every nation's fundamental data had its own risk. So if in comparison with G8 country, New Zealand and Australia is really the more sure buy right now. Now this afternoon we will have the New Zealand RBNZ rate statement. That might not be too much volatility because it's widely expected, especially since Tuesday's inflation report. It's really expecting RBNZ to keep the rate unchanged, and moreover, they might not be too dovish. But we never know, since it's Wither's last term, the governor, he's going to retire, so he might be more de jure to speak up his mind. But I don't know. But we just have to take a look at for the press conference. Finally, Japanese yen and Swiss franc. It's not really easy to trade these two currencies right now. They really go with the flow of whatever happened to global sentiment. And global sentiment changed right now, not only day to day, but session to session. So that's why I say it's hard to trade in a daily perspective. It's better to trade in an intraday trade or weekly. So you either go very long or you go very short. But if you want to trade Japanese yen and Swiss franc, go with the flow, see what happened to the equity market, what happened to the news, and just trade with the fundamental, trade with the technical trend. Then you will have a better chance. But again, it changes session to session, so that's why it's hard for me to see what's going to happen. Now, the short thing is that, of course, if you have a global panic, you can always buy Japanese yen and Swiss franc, and we might have that this week. Because on Friday, Donald Trump is going to meet with Prime Minister Abe from Japan. That might provide some volatility. I don't know which side to go, but of course, I'm more biased in the bearish side. So if you want to place a bet prior to the weekend, it's really best to buy Japanese yen instead of sell it. But of course, if you're not sure, then just stay on the sideline. So that's pretty much what's happening today. Let's take a look at our daily chart. So first thing first, I took the Euro-Yen trade as mentioned. And it's not a daily trade. For me, I took it very simply. I took at this low area. So my reason is very simple. We have this huge drop of Euro-Dollar previously, but it's all reasonable. Have this nice retracement. You have this drop, you have this huge retracement. All this is fine. We actually have a double bottom. But then over the weekend, this is where the drop starting. This is from the French election panic. So we have this huge drop movement all the way, finally find a bottom on today. So as soon as I saw this, I go into the 4-hour chart and saw some nice big shadow signal, and that's why I took it. So of course, this is a more risky trade because knowing that you are trading against the trend, you are really catching a falling knife. So for me, I honestly don't have too much conviction for this trade. My reason is very simple, that I think euro still have a stronger fundamental data than Japanese yen. I still think euro had consecutive good economic data this year so far, and fundamentally speaking, I think euro is looking quite good. And I think the recent sentiment sale might just be temporary. However, I might be wrong because I did that last week with dollar yen as well, and I got caught up by this, catching the falling knife, which I actually lost. So, not something I would suggest, but you can always try to trade this kind of trade, providing you just have to have a good enough reason. For me, for dollar yen last week, it could have avoided because I don't really have any good technical signal to enter. Unlike euro, this today trade, I do have a very strong bullish signal here. I have first a bullish kangaroo tail, a bullish big shadow, another bullish kangaroo tail. Of course, I also have this bullish red candle right now. So I don't know where it's gonna go, but this just happened the last 4 hours. If when I was entering here, I do have this nice signal to really continue support my bias. Right now, of course, market can change anytime, and that's really the risk you have to bear. So in terms of hourly, I also draw that we have this lower low, higher low right now. So I want to see if this trend can hold well. What's going to happen right now is we're going to break out of this triangle either way. It's either to the upside or to the downside. So that's my trade right now. I also took a New Zealand dollar trade today, and this one, I'm more confident about this one. Now I took this one upon the release of GDT price. It was not a plain trade because GDT price was not scheduled. We also don't have any data to trade a surprise. But the result was a 3.5% growth, and that was better than 0.6% last time. And I think it's quite, I didn't trade it just because of the data. It's because I think New Zealand dollar, I'm very biased toward buying it. I still think it's a fantastic currency to buy. That's why I get into it, and I was hoping today's RBNZ meeting will give me another good sentiment. Now, of course, you have to be careful trading this close into a risk event. It's not recommended, but this time I'm more confident knowing that RBNZ, not only they will not cut, the statement might also be more, I wouldn't say hawkish, but it's not going to be dovish. And the reason I say that because it really, if you want to trade out New Zealand, you have to compare what happened to Australia. And vice versa, if you want to trade Australia, you compare to what happened to New Zealand, because they two are very, very similar in terms of the economic structure. So for me, because this week's RBA meeting from Australia, it was quite positive tone. The statement was quite hawkish. So that's why I think RBNZ is very likely to follow the state. They are not going to give too much negative picture for their economic outlook, and that's why I think it will provide another strong sentiment. So that's why I got in at handle 0.73, and this one really, I don't have any technical signal. I just got in at a really good handle. But if you look at the daily chart, of course, today you do have a sort of, this kind of, it's not a kangaroo tail, but it's like a indecisive movement. My stop loss is very low. It's way below this view. It's right at this white line. So that's why I'm quite confident to hold it for more in a long-term perspective. Why US dollar? Well, because US dollar is very negative for me right now. I could do New Zealand yen, but Japanese yen can have strength into it any moment if we have a global risk event, which we will have more likely in a recent global sentiment. Also, I'm already in Euro Yen, so I don't want to go more than one exposure on Japanese Yen. I pick US dollar because I think it's going to be more sentiment in the downside from Donald Trump. That might help my New Zealand dollar trade. So that's my reason to get into it. Okay, so let's take a look at our 28 pairs. Just give me 1 second. So right now, Euro Pound, Euro Swiss. If you are in Euro Swiss yesterday, as I say, you're sitting at the low, you will always have this small pausing movement. Now, this is something, if you are in the short seller, you gotta be careful because you might have a double bottom to reverse it. And just knowing that Euro still have a better fundamental strength than Swiss franc, Japanese yen. Euro dollar continue to drop, and that's a worry sign for a Euro buyer. However, you are still largely, yes, you broke the downtrend, but you are still largely within this area. So we will see what happened to Euro. And if you back then took upon this kangaroo tail, then this trade might work out in your side. But again, because Friday Donald Trump is going to meet PM Abe. Moreover, you have the court ruling. It's just hard to trade US dollar nowadays for a daily perspective. So that's why I would suggest people to not take a short trade. But if you took you might reach your 1-1 very soon. But nevertheless, I don't have any signal right now for euro dollar. Euro Aussie continue to drop lower, and I think same as Euro New Zealand probably. Let's take a look at Euro New Zealand. Same thing, continue to drop lower, but we seem to find a decent support of 1.4550. So it is still going a downside, but the thing about trading is it's always gonna go up and down before it's reach a general direction. Euro CAD and Euro Yen. Now, of course, this is the trade I'm currently in. As you can see, I am in this sort of drawdown right now. My stop loss is very tight. It's just at this 119.50 something. So really depend on what's gonna happen. I was hoping this to be a good trade, but it might be wrong. So I'm just gonna keep holding it. We do have this kangaroo tail, but it's just very, very small. And let's see how this is going to play out for today. Just give me 1 second here. Just give me 1 second. I am changing my okay, never mind, let's keep going. Pound Swiss, you have this nice big shadow movement. Again, as I mentioned, if you want to do any trade for anything, really it's best to go to intraday trade movement. So for the British pound, I do want to buy it from this current sentiment, and you have this nice daily signal, but I wouldn't want to go into a daily trade just because it's too volatile to get into any trade right now. Same as cable, you have a nice kangaroo tail. Pound Aussie, Pound CAD, Pound New Zealand also have a nice kangaroo tail, and Pound Yen, you have a nice, wow, this is a nice big shadow. It's very significant actually because you have a gap down, it's close higher. So if out of all the pound pair, I will go long with Pound Swiss, Pound Yen, and Pound Dollar. I will try to avoid going Pound Aussie, Pound CAD, or Pound New Zealand because Aussie, CAD, New Zealand still have a better fundamental strength, where Swiss franc, Japanese yen has a lower fundamental strength, and US dollar is in a very weak sentiment right now. But I would not go into a daily. So for me, really, I'll go into hourly to see if we have any sort of hourly signal to get into it. Swiss franc, Japanese yen, you do have a kangaroo tail, but really, I don't have too much to trade about for this currency. So I'm going to skip it. Dollar Swiss, today, you do have this nice big shadow right at the 200-day moving average. This is, you can trade it again. You can trade it in the hourly perspective. Really, right now, it's a very tricky situation. So you could trade if you have any nice signal in dollar Swiss. You could get into it. You do have a nice support in this moving average here, so you could trade it. Aussie Swiss, nothing here. Aussie dollar, Aussie CAD, Aussie Newsy, Aussie yen. Aussie yen also have this. It's not really a kangaroo tail actually, but if you wanna buy Japanese yen versus Australian dollar, this one is also not bad to trade in an intraday perspective. But because it's not really a kangaroo tail, so maybe not something we're looking to buy into it. Take a look at CAD Swiss. Now Canadian dollar, I will stay out for now just because I don't have a clear direction. New Zealand Swiss. This is Swiss also looking okay. It's not really a nice big shadow movement. Again, you can go into a daily trade to buy if you prefer to do that, and New Zealand. So I don't have too much thing right now. Really, I'm currently in Euro Yen and USD dollar. If I want to get into right now, if I'm flat, I will want to buy some British pound. I might also want to buy Aussie yen, but again, I will go into a much shorter time frame to trade. So that's pretty much what's happening in the market. Tomorrow, later on, we don't really have any risk sentiment today. We have crude oil inventory at 10:30 Eastern Standard Time, and that's it really. From now till then, you don't have any other risk sentiment. Until 3 p.m., you will have the RBNZ statement finally coming up. So that's the only tradable event. Until Asian session, you will also have RBNZ government leader speaks. Aside from that, it's going to be a very light economic data day. That doesn't mean it's going to be a light movement. I do suggest you watch out for the court ruling from US. Watch out for any parliament update for UK. And finally, watch out for any updates from Donald Trump. You can actually follow his Twitter. I know it's not that not ideal for people, but that's really the fastest way to get a current sentiment is to follow his Twitter. So that's it for now, guys. I'll be back tomorrow with another daily analysis. Thanks for watching. Bye bye.